Good morning, everyone. It's Monday. I'm live. It's 8:30 a.m. I've had a bit of a break. I had my birthday weekend, and thank you to everybody in my community that sent me all the best birthday wishes. That was awesome. So we're back here. It's 8:30. You know what to do. You've got to say hi. You've got to give me a shout out. You've got to give yourself a shout out, and then we can get into all of the latest breaking UK property news. Hi, I'm Rick Gannon. Welcome back to my channel. So folks, good morning. It's Monday. Are you feeling Monday-ish? We're nearly Christmas time, aren't we? We're breaking up on the 18th. So you've got to say hi. Let's do some shout outs first of all. Normally we'll wait a little bit. We'll do a first news bulletin, but today we're going to go straight in and we're going to do the shout out straight away. So please do tell me where you're watching from and tell me your name, of course, and then we can do the shout out. So first of all, Phyllis, good morning, watching from London. Nice to see you. Good morning, Julie, watching from Hemel, and you've clicked on the share button. Good morning to Michelle. Good morning, everyone. Ready for an energetic week from Wandsworth. Are you breaking up for Christmas time, Michelle, or are you going to be working all the way through? So, folks, come on. You're being really quiet this morning. You've got to say hi. Good morning, Lucas, watching from Exeter. Richard's watching from Rickmansworth, and Curtin watching from Hertfordshire. Good morning to you. Mihaela watching from Bucharest. You've got the ticket this morning for the furthest away up to now anyway. Good morning, Joanne, watching from Stratford upon Avon, and good morning, Hordle Property. You are watching from the New Forest. So folks, if you do like what we do here, please click on that share button. People, you know, you've stopped sharing it. All you've got to do is click on that share button so we can get this news out to everybody else. You've already done it, Hordle Property. Thank you. Bruno, good morning, watching from South Wales. And Michelle from Hong Kong. Michelle, you've got the ticket now. You've just won the furthest away viewer today. Can anybody else beat Hong Kong? Joel, good morning, watching from Reading. You've clicked on the share button. Thank you. And Chris, watching from Cambridge. Happy belated birthday. Thank you. Alex, watching from Worcester, just around the corner. And Yemi, watching from Essex. Happy belated birthday. Thank you so much. Okay, let's do the news. So what's going on and what's been happening over the weekend? The first bulletin we're going to cover is how will Brexit impact the housing market? Now, we've kind of forgotten about Brexit, but it's all over the news today. Now everything, you know, COVID vaccines, it's all been rolling out, and now Brexit's back in the limelight. So we've got a report here from somebody called Ryan Prince, who's the founder and chief executive of a build-to-rent brand called Uncle. They've got 5 buildings across the UK, and they're stating that they believe it's nearly impossible at the moment to separate the impact of Brexit from COVID, with the latter set to have a much greater impact on the rental market over the next year. Over the long term, 5 to 10 years, it's more the issues relating to supply chains and currency rates from Brexit, which will impact the supply of rental property. It's also likely to affect how fast and efficiently construction companies can obtain supplies. That's going to be one of the biggest things, as well as the price, potentially slowing the rate of new developments across the country. Now, he's gone on to say that the fluctuating value of sterling, particularly against the euro, will also impact the cost of building, possibly leading to more renters in the short term if housing developments are postponed. And that being said, he believes that the government's attitude towards domestic planning policy post-Brexit will inevitably have a much more significant impact on the housing supply. He thinks that the notion that landlords will have the pricing power to decide to increase rents as a result of Brexit is ludicrous. The rental market is based entirely on supply versus demand, and with the post-Brexit system set to be more restrictive, demand will most likely be lower in the short term at least, he says. If companies choose to move their headquarters from London to other major European cities next year, the number of high-skilled professionals in the capital will also subsequently decrease in the short term, meaning some landlords may seek to increase rents in an attempt to earn back what they've lost. However, he thinks it is more likely the uncertainty around Brexit will force a number of landlords to freeze rents in order to maintain a steady income, meaning, if anything, tenants should be able to save money. So that being said, folks, what are you doing with your rents moving forward? Now, January normally sees landlords, investors starting to look about increasing their rents, doing their cash flow forecast for the year and looking at the bottom line. Now, we've not increased, in fact, we don't increase rents an awful lot anyway, but generally what we'll do is we'll review every time we have a void and see what the market is attracting in the area for that room. So rather than increase rents mid-term, or sort of after the tenancy goes from fixed term to periodic, we will then look at maybe increasing when the tenant moves. We don't generally have a yearly rent increase policy. What do? Are you putting your rents up this year? We're staying the same. I think it's really important at the moment that we are fully occupied rather than making sure that we are increasing rents when the country is in such a mess as it is. Let me know, folks, what are you doing? Are you increasing your rents? Are you staying the same? Next on today's news, no fewer than 15% of all sales agreed in November went to landlords, and that's the highest figure for 4 years. So this is the buy-to-let Goldrush. The data comes from the research team at Countrywide, and their brand is Hamptons, newly rebranded from the old Hamptons International. The agency says landlords have joined other buyers in rushing to complete their purchase ahead of the stamp duty holiday ending in late March. Of the 15%, just over half were purchases made in cash. Across 2020, investors will buy around 134,000 homes, and that's up slightly from the 133,000 bought in 2019. The average price paid for a home by a landlord in November was 180,000, which is around 80,000 less than that paid by an owner-occupier. This means a typical investor who still pays a 3% stamp duty surcharge will incur a stamp duty bill of £5,400 if they complete before the holiday ends. If they miss the deadline, the typical bill will rise to £1,100, or rise by £1,100 to £6,500, and landlords will pay an estimated total of £365 million in stamp duty on the sales that they have agreed between September and November if they complete before March the 31st. However, this figure has the potential to rise by 20%, or 74 million, taking the total to 440 million if the stamp duty holiday is not extended and they complete after the end of March next year. What do you think is going to happen? Do you think that they will extend it? Now, the government have given us loads of surprises over the last 12 months at the final hour, and they've extended things. They've had a lot of lobbying. They've had a lot of pressure groups. Do you think that, firstly, number one, we should extend the stamp duty holiday? And secondly, do you think the government are actually going to do it? I don't know. It's brought some revenue in. It's made the Goldrush happen. It's falsely ballooned the property market prices because people are rushing to get that stamp duty, but not everyone's making a saving because the prices are artificially, they've been ballooned anyway. So not everyone's making a saving at the moment. What are your thoughts on that, folks? Let's have a look to see what everybody else is doing. Hordle, you're staying the same. Sarah, only looking to increase after vacant rooms or refurbished, same as us. Raj, good morning from Ashford. Kim saying, morning from Tamworth. Agreed, reference rents. We generally review when we have a void, don't anticipate increasing this year. Chris saying you're keeping the rents the same. And Chris Harris saying slight increases as voids come along. No increase for existing tenants. Viv, good morning. You've liked it and shared it. Thank you. And Raj saying yes to both. We should extend the stamp duty holiday. And yes, the government potentially will. What do you think, folks? Let me know. Do you think, number one, that the stamp duty holiday should be extended? And number two, do you think it will be? March 31st, it's not that far away now. If it's going to happen, I think the government needs to make an announcement sooner rather than later to encourage more landlords and investors to actually carry on buying property, because now we're on that cusp of whether you can get conveyancing done in time in order to be able to benefit from the stamp duty holiday, which ends on the 31st of March. Kurtan saying, I don't think the stamp duty holiday will be extended. Sam, you're leaving your room rates the same. Gabenga, good morning from Wickford. And you're also saying stamp duty holiday should be extended. Kurtan saying you don't think it will be. I think it'd be great if it does. I'm not sure it will be, but I think the government really need to start thinking about it if they are going to do it. What's next on today's list? Regionally, the rush has been concentrated in the Midlands and the North. So this is a continuation. So I didn't finish that news report there. We went on to start talking about stamp duty. So regionally, the rush has been concentrated in the Midlands and the North. And if you watched, I did a YouTube video a week ago, maybe 2 weeks ago, where's the best place to buy? And the Midlands came out, or Birmingham specifically, came out on top based on lots of different factors: return on investment, growth, and rental yields. Now, some 22% of homes sold in the West Midlands were bought by investors, followed by 18% in both the North East and the North West. Even in London, not favoured by investors in recent times, the figure stands at 15%. Just like in the months leading up to the introduction of the 3% second home surcharge way back in 2016, landlords have rushed to take advantage of reduced stamp duty bills. Now, the head of research at Hamptons has said, but the difference between today and 2016 is that the stamp duty cliff edge is around 5 times smaller, meaning the financial impact of missing the deadline is indeed reduced. With over half of investors, the purchases made in cash during November, those taking advantage of the holiday are disproportionately larger investors expanding portfolios rather than new investors starting out. And with landlords also making up a rising proportion of sellers, in many cases, larger landlords are buying homes from smaller landlords. Next on the list, very short one, the average monthly private rental sector in England over the last 12 months to September was £725. So that's the average monthly private sector rent is £725. This fluctuates a lot. The figure released over the weekend was the highest ever recorded by the Office for National Statistics. There were huge regional differences, of course. London had the highest median monthly rent at £1,435, just about double the All England average, whilst the least expensive area was the North East on just £495. When looked at on a local authority basis, the difference in monthly rent between the most and the least expensive locations was nearly £2,000 according to the Office of National Statistics. Next today, a council in Scotland is set to be the first to introduce regulations for Airbnb and similar platforms in the start of the short lets sector. ARLA Property Mark, which has been campaigning for greater regulation of short lets across the country, says that controls will be put in place in Edinburgh by April 21. The Scottish Government, which first gave councils the potential to regulate short lets back in January, has said Edinburgh now has similar policies for the letting sector, so it's an obvious location to pioneer these policies. ARLA said that the next steps for Edinburgh Council and all other Scottish councils will be to consider the identification of an area or areas to be proposed for short-term let control. A survey by ARLA Property Mark in partnership with research consultancy Capital Economics showed that across the UK, the number of active listings on Airbnb in the UK rose by a third to 223,000 in 2018 from 168,000 in 2017. Edinburgh Council says that over a different period, its number of short-term lets tripled, with 32,000 active listings in the Scottish capital in 2019, and that's up from 11,000 in 2016. What remains to be decided is exactly what controls and how. It's understood that the Scottish Government proposals for regulation do not involve controlling the numbers of short-term let properties by imposing a cap or a limit. Instead, it wants all councils, starting with Edinburgh, to consider how to introduce and enforce restrictions appropriate to local circumstances. There we've got that, folks. What happens in Scotland normally gets rolled out in England. Let's see what happens with that. If you've got any comments, let me know. Michelle, I think the UK government should extend the stamp duty holiday. A lot of Hong Kong investors are interested to buy property in the UK. It's always been the case, hasn't it? I think it's going to slow down. I think the appetite is going to slow down with new stamp duty increments, etc., that we are expecting from overseas investors. Sarah, extending stamp duty would help those deals already under offer, as the completion process, from my experience, has been severely extended, even in my case where no chain has been involved. We did a report, didn't we, about a week ago, that the conveyancing now is taking a lot longer, and mainly it's down to councils not having the resources to be able to put up with the demand at the moment that the market is showing. So folks, that's it from me today. I'll be back here tomorrow at 8:30. Please click on the follow button and that subscribe button so you just get a reminder when we go live, so you don't miss all of the latest property updates. I'm here just to share all of the breaking news for you. So if you like what we do, click on that like button, click on that follow button, and I'll be back here tomorrow at 8:30. And don't forget, no matter what you do today, make sure that you have some fun. Take care. I'm Rick Gannon. Welcome back to my channel.